Welcome to the Open Banking session at the Finance Magnate Summit today. I'm delighted and honoured to have three esteemed speakers to entertain you, to inform you and inspire you about this exciting domain called open banking. The usual thing about events like this, the most important thing is people need to hear a little bit about the quality of the speakers. So I'm going to let them tell what a good quality of a speaker they are by asking them to introduce themselves. And Hugh, tell us a bit about yourself and the company you're in.
Hey Tony, thank you. So I'm Hugh Davis. I'm one of the founders at a company called Ozone API. We help banks deliver open banking APIs so that they can adapt to this new world and serve their customers. But many long years in the banking industry and building out and delivering banking propositions and payment propositions.
Very good, very good. Todd, go.
Yeah, hello everybody. My name is Todd Clyde. I'm the CEO of Token. And Token provides an open banking payments platform. And we exist to really drive a shift in payments traffic from the use of credit cards and wallets to the use of bank transfers.
Very succinct. You said that before, haven't you, Todd? And Jan, please.
Thanks, Tony. Good afternoon, everyone. Jan Van Wano, Head of Research for Tink. Tink is an open banking technology provider. We're helping large enterprises such as NatWest improve the financial well-being of their customers by basically enabling them to enrich data, expose data in different types of ways, and of course, aggregate all of the different open banking connections for account information services as well as payment initiation services.
Very good, thank you. And I'm Tony Craddock. I'm the Director General of the Emerging Payments Association, a community that has these three companies all as our loyal and active members. So open banking, I reckon, is one of the, if not the most exciting strands of innovation in our industry. But let's just go back to basics here. What on earth is open banking? Now, Hugh, you were the author of Unleashing the Potential of Open Banking report that if anybody wants to read a bit about open banking should be downloading it right now from, well, after this session, of course, from the internet. But tell us, what is open banking?
Yeah, it's a good question, Tony. And if you search it online, there are so many different definitions that come up, and some of them will confuse you, and some of them get incredibly complicated. There's probably a few ways of looking at it. From an end customer's perspective, kind of a really simple principle is allowing customers to really be in charge of their own data and their own money, and allow them to access their data and share their data without having to do it through their bank's mobile channel and branch. So it's about putting customers much more in control of their information and their money. So that's the high level concept. It's allowing customers to access their information. Technically, it's actually about banks delivering a new channel to market. And I think this is a really exciting change for banking. So historically, banks their main channels to market have been their branches, their websites, their mobile apps. And in this new world, what banks are doing is they're creating a new technical interface, an API, which allows other companies to connect to the bank and start building propositions and user experiences based on the services and the products and the capabilities that bank has. Put it into a different context. If you think about something like Google Maps, it's a service that Google have built. It's a fantastic service. They've made it available through APIs, and it's become a foundation that so many other businesses have built on top of, whether it's getting a taxi through a taxi app, whether it's your going for a run or a bike ride and sort of tracking the route you've done. There's all sorts of apps and experiences now that are based on this one core capability. And they've made it available via these APIs so the developers and other businesses can build on top and create great propositions. In the banking world, that's exactly what open banking is. It allows banks to create a an interface that developers, third parties, retailers, whoever can build on top of and build richer, innovative, new experiences, leveraging the assets and the capabilities that bank has, the ability to lend, the ability to move money, the information that they have. So actually, I think rather than a sort of technical initiative, it's potentially a dramatic transformation of the banking business model, and a really exciting one. And it is happening around the world for different reasons. So UK and Europe, it's really being driven by regulation, but it's happening in a big way. China, actually, this has happened over a long period. Now, customers do most of their banking through these super apps like WeChat. US, again, it's developed over market forces, with customers wanting to see all of their accounts in one place, and platforms like Plaid emerging. So it's happening right around the world for a number of different reasons. But there's this principle of it puts customers in more control, and it gives banks a really new and exciting channel for how they can get their products and services to more customers and in more ways.
Very nice. I like that. That's very beautifully described. Todd, do you have any tweaks on that definition, or anything else to add to that?
No, I think I agree with that. Maybe I could talk about some of the early use cases that it's powering. So as Hugh said, it definitely gives consumers control over this rich data that's banks hold on them. And it gives them access to instruct the movement of their money. And so that's the power it gives to consumers. But what it gives to a third party, if I as a consumer give that access to a third party, is they can create whole new applications. You know, Hugh said there's already these super apps around the world, but think about what those new applications can do. They can leverage the rich insight that is contained in my bank account to improve their app experience. For example, personal financial management tools, budgeting tools, cash flow management tools are probably the #1 use case. A #2 use case is when you apply for a loan, making that loan application much simpler and helping generate your credit score. Also just simplifying the onboarding process to an app, you know, make it easier for me to get all the information I need to register you to use my application. And then on the payment side, what this does is this creates a fundamentally cheaper form of payment that settles more quickly for the merchant. And you know, this could just really unlock a whole new avenue of cost reduction possibilities by lowering the cost of payments. So those are the use cases that we're starting to see around open banking, and why I think this is going to be such a significant disruption to banking and payments, you know, unlike we've seen in the last 20 years.
Yeah, very, very good. And Jana, what additional use cases have you seen? You're as a head of research, you must be out there researching and seeing these things. Anything you'd like to share on that?
Yeah, I mean, I have to agree with Todd on the fact that, you know, PFM, onboarding, customer acquisition are some of the primary areas where we're seeing successful use cases being deployed. But literally, I think we're just at the tip of the iceberg in terms of seeing the unprecedented type of innovation that can emerge through open banking. And I'm sure we're going to be talking a little bit more about that later on during this panel. To the definition of open banking, if I may, I think there's a lot of semantics around open banking and a little bit confusion as well, because I think open banking as a movement in the industry has been around for quite a while. Actually, Tink was founded back in 2012, and Tink actually just completed an acquisition of a Spanish pioneer called Eurobits, which were doing account information services back in 2003. So it's actually been around for a long time, but we've only started to dub this movement open banking over the past couple of years, as the UK established basically after doing a market investigation, establishing new legislation, which they had dubbed open banking. So it's interesting that, you know, in some situations, when you refer to open banking, you're referring to the UK legislation, and in other situations, you're often referring to the broader industry movement.
And that's,
you know,
That's one of the reasons it gets a bit confusing, and that's one of the reasons why we've got three experts on the panel today to demystify it for the people who are in the audience. So thank you for your time to help to do that. So Hugh, it's kind of new, but it's not. What are the different constituent parts of in open banking? Who are the different players?
Yeah, so it is, as Jan was saying, it's an industry now that's bred its own vernacular, and there are so many acronyms, and it's potentially very complicated. But again, there's also a way of viewing it in a pretty simple way. So perhaps thinking about the constituents, there's maybe two ways I'd look at this. Kind of how does it work at a super high level, and then who are some of the players? The how does it work? Effectively, banks are exposing a technical interface that other third parties can connect to with the customer's permission, so they can access the information or make a payment, as Todd was outlining earlier. A really important part of this is all based on a user's consent. So it's a really, really secure platform for data sharing and for initiating activity. So in every single interaction, a customer is providing really clear consent that they're allowing this third party that they trust to do something on their behalf. And there's a really strong set of security standards and protocols that sit behind it that mean only the right players can participate in this, and through a really secure set of technical standards. Now, in terms of the players, it's actually, in theory, this should mean that a customer can give permission to an end proposition provider to get the data from their bank, a really simple value chain. But of course, there's a whole load of specialism and expertise in making this work. So there's a real value chain of players that have emerged in this space. So the banks are exposing these APIs, and there are players like ourselves who've developed to help banks do this in the most effective way. So we help banks deliver really highly performing standards-based APIs, so they work. But the banks expose these APIs. And then there's this whole world of third-party players who help piece it together, so the end customer's getting the really interesting proposition that they want to use, whether that's seal their accounts in one place or make a payment. There are a number of players, and Todd and Jan will be able to talk in far more detail around this, that are helping to try and make this easier for the rest of the world. They're helping to try and simplify. How do you connect to all of these different banks? And
because it's not simple. I mean, somebody said to me, "What does an API look like?" Because you know, and you go, and then somebody said, "What's an API standard look like?" And so I went off to the OBIE, the Open Banking Implementation Entity, about 1.5 years, 2 years ago, and I asked for one, and they sent it, and it had 108 pages, and it was an absolute monster of technical stuff. So that's what an API standard looks like. I felt, but you know, it's not easy, this stuff, is it?
Well, it is a technical specification. And if you think this is about banks allowing access to bank systems to get data, it needs to be really well defined with really strong security protocols. But yeah, because of this, there's some complexity in this world. So players like ourselves, like Token, like Tink, have emerged to help make this easier for everyone else and handle the complexity. So yeah, you've got a bunch of players who are helping make this world work better for the end users. And then there are all these really innovative, exciting propositions that the banks are building, that new fintechs are building, that retailers and loyalty programs and lenders and all sorts of players are building. I mean, fundamentally, if you think about access to this really rich information and the ability to take action, move money, actually that's something that can add value to so many different sort of commerce experiences and life experiences that we have every day. Yep. The opportunities are almost endless.
Brilliant. Todd, thoughts?
On the constituents, no. I think what I would comment on is, I think you have a very interesting panel here. So Q and Ozone really focuses on creating an API exposing the information outward from banks. And now, as Hugh said, it's not that simple for any third-party app just to access every bank's. You know, it's a tremendous fragmented ecosystem. That 108-page spec, Tony, was implemented very differently within the UK and across the UK. So there's companies that have kind of emerged as aggregators to help do that. So I would say, you know, Tink is one that's focused much more on data use cases, enrichment, categorization, et cetera. And Token has chosen to focus much more on payments use cases, you know, as we believe this is going to fundamentally drive a shift in how payments are made. So it's a very interesting, you've kind of got three software providers on both sides of the ecosystem, a provider of APIs, a provider of new form of payments, and a provider of new type of data aggregation services.
And you know what, navigating our way around this new ecosystem is a challenge, I'd say. And you know, one of the things that happens as time goes on is we create our own terms, our own vernacular, as Hugh mentioned, our own jargon. And one of the things I think we've got to be careful about, and one of the reasons I'm so pleased that we're doing this sort of session in a broader finance conference, is that if we're not careful, these things become a barrier to other people taking them on and using them. And we have to bring people with us. We have to educate and inform as we go along. So, okay, very good. And yeah, anything to add to that? Because I want to ask the question of all of you is how well you think it's working so far. You know, we know that evolution or innovation in our industry, you know, we expect a lot in a short time, and it normally takes a lot longer. And the debit and credit payment in ecosystem and the scheme-based ecosystem is 60 years old. So, you know, we're just a few years old here. So let's talk a little bit about that, shall we? About how well it's working so far. Who would like to go first on that? Yeah, and do you want to have a go? How well is it going for?
Sure. And also just briefly reflecting, I think, I mean, I don't think we should forget that at least part of open banking, the regulated part, basically stipulates that there are certain requirements in terms of the types of functionalities and the type of data that banks are ultimately need to provide through these APIs. And that's why the 108-page type of documentation is so incredibly important, is because when a company like Token or Tink or even Ozone doesn't get that full extent of that information, there's going to be unpredicted results and, you know, corner cases that are just not known to anyone in the industry. So I think having that rich information is incredibly important, and it also allows the ecosystem to fully test, do these connections actually meet all the requirements articulated in the regulation? And I think that's been actually one of the primary challenges, not just in the UK as the banks move and evolve their conformance to the different versions of the standards, but especially in domestic Europe, where we have seen just a vast fragmentation of the deployment of standards and the let's say the maturity and the quality of the documentation.
What's the consequence of that? What happens as a result of that?
Well, as a result, that means that those entities that are regulated to provide account information services and payment initiation services, TPPs, that are looking to benefit on top of and innovate on top of open banking, that means that, you know, they have significant barriers of entry. You know, they have obstacles in actually being able to deploy their business cases, their innovations. And that means a lot of trial and error and a lot of situations where you know, the innovation comes to a standstill because there's either a lack of support or lack of documentation and unable to get to where the use case needs to go.
So fragmentation is a bad thing. Jan?
Well, it's not necessarily, I wouldn't say it's a bad thing necessarily. I would say what the industry needs is basically a complete service, and that could, on one hand, mean complete documentation or an API that actually meets all the requirements that are articulated in regulation. So I wouldn't necessarily say that fragmentation is important, because if you look across the spectrum, there are only a couple sets of standards, basically. and it's once you've done 4 or 5, you'll recognize a similar pattern in the rest of the market. So trial and error can be sort of be iterated quite quickly, but what you then need is then to be able to trust on the APIs that they actually do what they say they'll do, or do what they're promised and required to do. And I think that's really where not necessarily the fragmentation, but it's the completeness.
So Todd, we've been on this journey for a little while. Tink back in 2012, did you say it was founded? And we know that in the US, a lot of people say that Venmo and things like that are fairly well mature kind of examples of open banking. How well are we doing? Is it big potential? How well is it going?
Well, I think it's been an incredible success. There's a lot of detractors out there. As with any new technology, you always get people trying to move the goalposts. You always get people saying it's not delivering the returns, or in this trough of despair. But what I look at is it has really, so PSD2 really has catalyzed the innovation that we've talked about by enabling this new layer of financial services. It's made banks work harder to keep their customers. So I think it has done all that. So it's catalyzed access to banks. It's catalyzed this ecosystem. And as Hugh said in his opening comments, it's catalyzed this happening around the world. So, in a couple of weeks, I'm actually going to be giving a presentation where I say open banking, the Big Bang, and the Galapagos Islands. So to me, the CMA order that made banks in the UK first have to produce APIs was the Big Bang event that really set all this in motion for this ecosystem to form and these third parties to evolve. The open banking implementation entity in the UK, created the environment in the UK for this to evolve much more quickly. So the UK is the Galapagos Islands, where early open banking life forms evolved much more quickly than everybody else. And so from that.
Sorry, by the way, can I just say, I really hope you're not referring to the Brexit nature of the UK as being the Galapagos Islands of Europe. It's sort of pushing us out into the middle of the Atlantic Ocean. I hope that's not an analogy that we can work on too much.
No, it's where the conditions were created for early life to evolve.
Right.
And so early open banking use cases to evolve. And the UK, the UK started it all. Yes, China, yes, others have done it, but when you look at pure API format, the UK has really led on this. And it's not perfect. We have a long way to go. Just like life, there's a lot more evolution to go through, but it started. The catalyst has happened. The use cases are happening. Early life forms have emerged. And, for that, I think it's a tremendous success.
And to add to that, it's also, across the board, there are significant investments going into this. So one of my recent reports revealed that banks are investing 50 to 100 million euros into open banking, into either enriching their products and services, or to become compliant, which is, I think, an astronomical number. It's hard to perceive, but it's a serious area of investment. And then to refer to the success in the UK, nearly half of all licensed open banking innovators, TPPs, are licensed in the UK. So as an example of being a catalyst, I think the UK is really a prime example for how open banking could evolve for the rest of Europe and the world.
Very good. So we're doing well so far. Excellent. Hugh, anything to add on how well we're doing?
Yeah, a couple of points, and within that, I think at some point, Todd, you compared us all to early life forms. So, I quite like that. Although,
so who's the plankton? That's the question.
yeah, I'm not sure how to react to that, but no, I think it's a really interesting question, right? And it's a multifaceted answer, and we've covered a lot of it, so I won't try and cover the same areas, but it's important to recognize that this is a major foundational change, and therefore they take time to really have an impact. It's like when the M1 was first built, it didn't have as much traffic on it in the first year as it does today. So the banking industry has been putting in some significant infrastructure. I think the signs are really good. And I think there are some things that are still holding it back. So that, I mean, there are a bunch of numbers that show the signs are good. So the number of authorized third parties, I think there are 410 across Europe right now. The number of API calls, which I think it's 500 million API calls a month. The number of users that are using this, and that's, by the way, just across 9 banks in the UK. The number of users, but importantly, the things it's allowing them to do that they couldn't before. So there's a whole bunch of customers that were on the periphery of the traditional banking market. They couldn't get access to loans. They couldn't do certain things. And this access to data has allowed them to qualify for loans when a credit score alone wouldn't. So it's creating some real impact. The numbers are starting to get impressive. It's happening around the world. So many markets have looked at the UK and are now copying, well, they're now building on the learnings, and I think doing it better in a few places. So Brazil is moving, Mexico is moving, Canada's moving, a number of markets in the Middle East. There are some challenges though. So because this started in the UK as a compliance initiative and a bit of a headache with a big stick, actually the start point a lot of banks took was, how do I do the minimum to tick the compliance box? Not how can I build the best platform for third parties to connect to and develop. So I think we'll see a second phase that really unlocks an additional level of growth. And the standards will continue. We talk standards. There are different versions of standards. We help banks with that. And they will continue to evolve. This is early days. So as Brazil comes along and brings a scope of all financial services, those standards will need to evolve significantly from what the UK did, which was about current accounts and basic savings accounts. So it'll continue to evolve, which will unlock more. And I think for a period of time, we'll see lots of catalysts and sort of exponential growth in the early markets, and it following around the world and going quicker.
Super. So Todd, great potential, different little bubbles of excitement and opportunity and fires being lit around the world. What's necessary for open banking to realize its potential?
Well, sticking with my analogy, it's for the conditions to continue to be in place to allow life to continue to evolve. So again, I completely agree with Hugh. This was first viewed as a compliant, sorry, my light went off. I'll run when I'm done answering. And then I got to move.
Hold on. Do you have to walk around to get the lights to go on again?
I do. Let me answer, then I'll go turn the light back on. So yes, banks provided APIs. There was not a focus on user experience. There was a focus on compliance only. The experience was very usable. So in the evolution analogy, the conditions barely existed for early life forms, but early life forms created, initial PFM use cases, initial lending use cases. Finally, banks realized, hey, being accessible in other applications that my customers use on a daily basis is not a bad thing for me. So let's make this easier. And so, the connection evolved, the user experience evolved, and life has further evolved into more complexities. So what is needed is the continuing, well, number one, life to evolve outside the Galapagos Islands. So Europe is way behind. So they have not gone through that fixing of the user experience, and they're, a couple of years behind. Other things that are needed to really for this to evolve. So again, I think this life now can evolve without further regulatory intervention, without further detailed roadmaps from the OBIE, that's the Open Banking Implementation Entity. But I do think there are certain things that we need their help in solving. So the type of data that's accessible. So there's now an initiative called Open Finance. And that's really about going beyond the narrow aperture of data that was opened for PSD2 to making more data types available.
Okay, yeah, very good.
I think that's needed to help it emerge. Then on the payment side, what's really needed is this elusive long-lived consent for a payment, or being able to do recurring payments through APIs. And we could use some help in the conditions in the market for that to exist. And that's another thing that I think the implementation entities can assist with that would kind of help the whole environment improve.
Yeah. Very, very good. So super. And you're going to now run around and wave your hands madly in an ear. I think, I don't know what's going on in the Galapagos Islands over there in Token, but it's, and here's the irony, is the thing that was turning the lights off in Todd's office is supposedly advanced technology, but there's the irony. So Jan, okay, so what else? So we've got some, you need continually fostering, you need to continually foster the conditions for success. What other things do you need for open banking to be able to fulfill its potential?
Well, I mean, first of all, I think we should focus on what the initial objectives have been for the current regulations, and that is to foster an environment for increased competition and innovation, while also protecting the interests of consumers and reducing payments fraud. And I think we've come a long way in terms of enabling those objectives. But I think even within the current scope of PSD2 and the UK open banking CMA mandate, there's still a long way to go before we have fully realize those objectives. And I mean, just to give you an example, I mean, within the OBIE, there are still plenty of steps that are on the roadmap that need to be realized. Like, for instance, fully enabling reverse payments, which is maybe not part of PSD2 in the rest of Europe, but definitely is part of the CMA mandates within the UK. Basically the first draft standard for VRP, variable recurring payments, and sweeping were just released on Monday.
Yes.
So that's also another development that I think has extreme potential and enormous potential, but is something that is, you know, basically in the here and now, and I think we should be focusing on. And finally, and that is, you know, actually the UK standard is already a version, I think 3.1.6. It's actually quite advanced already, but unfortunately, most banks have only deployed you know, a couple versions behind that. So there are incredible opportunities that have implications for the customer experience, as well as for the innovation potential for the rest of the ecosystem. So I think focusing, yeah, you know.
No, sorry, carry on.
No, so I just to recap, I think focusing on the here and now and seeing what other objectives we can realize with the current tools at hand and instruments we have, I think will allow us to further realize those objectives.
To me, it is fascinating, gentlemen, isn't it? How, you know, you look at some things that work really, really well, and you know the scheme-based payments rails work really well up to a certain level. And things like this little baby works really well. You know, it's interesting. You can see the whole of my street next door, can't you? There you go. I'm not overlooking a beautiful green field. I'm in South London. There's a great deal of pieces that need to be in place for this to work. I think this is massively ambitious, because it's very hard for one country to do it on its own. We can lead the way, but our standards have to be integrated with and consistent with other people. So if you're looking at interoperability, particularly around the movement of money internationally, one of the things we're trying to do as a community at the Emerging Payments Association is to take friction out. And there's so much friction in the movement of money internationally. And there's, you know, how can we help to, you know, or how confident are you that we will be looking back in 10 years' time saying, you know what, we were just at the beginning of the ecosystem and really we did achieve the potential? How confident are you all?
I'm quite happy to jump in first, and partly build on the last one in answering as well. So very simply, I'm very confident. I genuinely think, I've been in banking for 25 years. I think this is the biggest change to the banking industry, or has the potential to be the biggest change. Certainly in the time of my career, I think it does fundamentally redesign the banking value chain and the business model, and it's very complementary, I think, to what the outcomes that good banks want, the outcomes that end customers want, and actually the outcomes that all of these other innovators want. So I think it will happen. I do think there are some challenges to get over still, and a lot of this is it's the early life forms evolving, as Todd was saying. I think there's a few things that really need to happen though. So I personally think, and we're really close in the standard space. It's what we do. We help make all of that easy for banks. I think it'll get harder before it gets easier. There are many versions of standards emerging around the world. Jan said we're on the 8th version in the UK at the minute. I don't think any of the major banks are on the latest version. Most are on several versions old. And the standards are evolving because the market potential and capability is evolving. And we've got variations of these standards emerging all over the world. So it'll get a bit more complex before it gets easier. But I think that's fine because it'll get us to the right place. I think one of the things that really needs to be unlocked is making sure there's some balanced market incentives. So the catalyst, as we said earlier, was a piece of regulation, which, if we're being honest, probably a number of the banks were dragged kicking and screaming at the beginning because they were worried that this was a big technical headache. They were worried about a strategic risk that we'll put this layer in and we'll be disintermediated and we'll become a utility and all our customers will be managed by these.
And that's not happening either, is it?
Absolutely not. No. Again, go back to the Google analogy and the Amazon analogy. You make your core assets available by a really good APIs and developer tools that mean what you do can be built into experiences elsewhere. So you're no longer encumbered by only being able to sell through your branches and your own channels. It's massive. But it was driven hard by regulation in certain markets. In other markets, it's been more by commercial forces. But what I think we need to see is a balance. So things like payments. So payments will be one of the things that makes this genuinely an everyday experience for people. How you move money, how you pay for small things, how you pay for big things. Now, payments cost banks money. Payments, there's real risk when it goes wrong. So actually, there needs to be a sensible model, which the regulation's been a catalyst, but across all of this, banks, it needs to work really well for banks to do it really well. Banks doing it really well creates this acceleration of the life forms, to use Todd's analogy. And we'll get there. We're starting to see that, but that's an evolution that needs to happen and happen quickly and move beyond the regulation to more functionality, maybe more commercial services, but that add more value.
So Todd, Hughes just mentioned that this need for balanced market commercials. How confident are you that we'll realize the potential of open banking?
Extremely confident. Using my analogy, life will survive on this planet and emerge. I agree with Hugh. It's the biggest change to have hit, certainly in my career. But it was not defined like a scheme with all the rules and all the protections and everything being thought through. I'll often refer to this as a Wild West. There were pieces left out. Consumer protection is left out. This is very merchant friendly, and all the liability sits with the payer and the payer's banks. As Jan mentioned, there's functionality that's missing. Boy, somebody should have thought of a refund. How do we do a refund? Somebody should think about how you might want to reconcile these payments. But again, life is evolving and will continue to evolve. And I completely agree with Hugh that yes, some more intervention in key areas, open finance and variable recurring payments, defining some key missing conditions. But most importantly, then commercial models. So, as these new conditions come to be, it should no longer be mandated by regulation and that banks have to give it away for free. I do think the success to the successful evolution of this life is that banks can cooperate with third parties in a way that's commercially advantageous for banks and third parties. And, I think that's very achievable, but I think that's kind of the secret to it continuing. In the end,
money matters. And if, people especially in a market where there's free in-credit banking, consumers are unfamiliar with paying for their banking in this market. But HSBC have just put out a paper on this and are bringing back the possibility of it being necessary, especially when we come into a negative interest rate environment. And blimey, how things are going to be impacted if it turns out that by putting money into a bank, I'm starting to be charged for that. There's an interesting quote. So, right, so we've got about 10 minutes or so left. I must say, I've enjoyed this so far, and I'm sure our audience has as well. Let's move on to, I think, a really, really important and topical thing. Two things I want to talk about. I want to talk about whether we're going to move from open banking to open finance in due course. But first, I want to talk about the role of this rather strange entity called the Open Banking Implementation Entity. It's a thorny issue. We're involved with helping the industry define what it is going to be. And I'd be interested in your views. What are we going to do with the OBIE? That sounds like a children's playbook. What should we do with the OBIE? So who would like to go first? Todd, why don't you go first?
Sure, I'll give it a go. So as I mentioned, tremendously thankful to the CMA order as the big bang that was the catalyst for all this, the OBIE that did create the conditions for all this to emerge. I do think there's a need for an ongoing role for them. It does not need to be as focused on building the ecosystem, defining the roadmap to such the level of detail, but it should be focused on those key hurdles that are the key barriers to the evolution of life. And those, as I mentioned, are open finance, so broadening the aperture of data that's possible. Second is unlocking the variable recurring payments, unlocking that long-lived consent. And for your audience, what's so tough about that is it just requires a shift of liability in this open banking ecosystem as it's been set up. And the third thing that I think they can do is to stand by and let commercial models emerge that are beneficial to both sides, rather than mandating the continued provision of everything for free from banks. So has an ongoing role. I think it's a more limited role, but it should be focusing on those key hurdles that are going to help this life form take step changes.
Very good. So Jan, how would you do those three things make sense to you? Are there any things you'd like to wrap on top of that?
Yeah, absolutely. But as I guess I pointed out a little bit in my last comments, I think the OBIE will continue to have an important role to fulfill their current objectives. So I think the roadmap, if you look at the CMA publication from May, which articulated the roadmap, it goes into 2021, which included a crisis impact period to take into account the pandemic. But I'm aware, if you read the notes on the open banking website, that additional extensions and delays have already been granted. So the current scope for the OBIE will go way beyond 2021, and they'll continue to focus on some of the key objectives that are currently in scope. But just to point out, I think the UK has a couple differentiators to domestic Europe. Yes, the CMA order and the standard is an important one. Second, I think the regulations in the UK, and specifically the FCA's approach to digital onboarding of TPPs, of licensed third parties, as well as agents, is a key differentiator for the UK and has allowed us to boost the number of TPPs in the UK compared to any other region in Europe, which I think is a key differentiator. And the third thing is really the role that the OBIE has in helping TPPs onboard and get familiar with the standard, start to raise challenges and issues that they have with the particular banks in order to have that resolved in a way. And in fact, we have weekly or bi-weekly meetings with the OBIE where they are helping us basically resolve tickets and in order to help us basically realize those functionalities and features that we promise to our customers as well. And so I think the OBIE has such an important role in helping the ecosystem get started, that I think even going forward beyond the current roadmap, they will have a potential to further support that.
Very good. Well, look, let's not forget that has been a part of the ingredients in what's helped to make this work, and maybe to focus on helping that entity to be the suitable one going forward. We've got 5 minutes and no more than that. What would you like to talk about?
Well,
what haven't we talked about?
You were asking a moment ago, Tony, around the inevitability of open finance. So I'll
yes. Let's talk about views on whether, because at the moment it's just banking, but there's pensions, there's insurance, there's savings, all sorts of other things.
Yeah, exactly. And by the way, just a view on that last question. I was privileged enough to play a role at OBIE helping to develop the ecosystem, and I think the CMA will call out when they think it's job done, but there's some really key capabilities that have been built that will need to continue to evolve for the good of the ecosystem, whatever form that takes. So there's some standards that will need to continue to evolve, and there's some core services that the whole ecosystem that uses, particularly to confirm and validate the trust of who am I dealing with, and are they allowed to do what they do. That, again, those services need to continue. And the question of open finance is a relevant one, because actually what's being built there is a set of national infrastructure that really helps as you move the scope of open data. And open finance, yes, I think is inevitable. It makes no sense to have a partial view of your finances, just seeing current accounts and savings accounts. You want to see pensions, investments, mortgages, and all of the same benefits around helping onboarding and things.
Yes.
This will move beyond it, though. You look at the consumer data right in Australia, that's fundamentally about open data, not open banking, and it's covering banking, utilities, multiple industries. Brazil, their regulation from the outset is saying next year all financial services products will be included. It isn't open banking. So absolutely it's inevitable, but it's inevitable that it will be more than open finance. What's being built is an infrastructure and a way for customers to securely give consent to some, in this case, authorized third parties, but give consent to one party to access and use their data that's sitting with another party. And I think that's a fundamental foundation that is relevant. Again, health. So it's inevitable.
And I really like how that all comes back to your opening definition of what this is all about. Todd, closing remarks, last minute or so.
Hope this has been educational to everybody in the audience, that, open banking is about banks providing access to data and payments. It's enabling a new financial services layer. All of you will be interacting with it within the next year or 2 years, and it will become part of our daily lives. So.
Open banking is coming. Open finance is coming. Very good. Jan, closing remarks?
No, I just, all I can do is refer back to Hugh's first sentence, and that open banking, open finance, open data, it's virtually a shift of power to the consumer, power to the customer, and the data subject. So I look forward to seeing how this evolves, and we will be trying to make sure that the ecosystem benefits from it.
Hallelujah to that. Thank you very much indeed, gentlemen. It's been an inspiring and informative session, and really thank you very much for sparing the time and sharing your insight. Much appreciated on behalf of the whole audience and the conference. Thank you.